All right, guys. Hope you're all having a fantastic weekend. I wanted to do a little weekend check-in on the markets as things are a little more volatile than usual for a Saturday slash Sunday at least. We typically don't see, um, massive movement, and the volume kind of tends to dry up. Address activity tends to dry up, which it is a little bit, but prices are moving massively in one direction a few hours at a time. We just had, at the time of this recording, about an hour ago, a dip to the low to mid 44Ks for Bitcoin. It's now back above 45K. If we look at just the last 24 hours, as these price changes are showing, it's pretty much right at even. Ethereum is just above even at 2%. And then we have a few, outliers like Avalanche. Elrond has had a couple of good days. Hedera Hashgraph has had a couple of good days. And OMG Network is also doing quite well. But you'll also see plenty of projects that are starting to retrace, like Algorand, that was on quite a run earlier in the week and is now starting to pull back. It doesn't mean it's necessarily going to continue, but of the top 100 projects, it's actually the biggest loser of the last 24 hours. That's the only one I'll really note on the losing side. But I want to just do a quick 10-minute, maybe 15-minute, we'll see how long this goes, recap of how Bitcoin is looking with a little bit of Ethereum sprinkled in. We'll save the other altcoin coverage for our This Week in Crypto call on Friday. So looking over here at our main Bitcoin hub that we usually use to demonstrate what some of our main metrics are indicating, we see that circulation is staying down. We actually did have a nice uptick on the tail end of this dip. Like when it started to get down to 45K and a little bit below that, we actually had a very good September 9th, aka Thursday, which was encouraging to see. And perhaps due to that and a few other aspects of the markets, the price hasn't fallen any lower than that, because that is clearly where addresses and circulation of tokens tend to start to uh, fire off a lot higher as a support level. People really feel that 45K level is a good time to either buy or capitulate, depending on what side of the fence they're on. So circulation overall is good, at least better. We wouldn't want to really count Saturday because, as I said, weekends are usually what all of these dips are. There's just never going to be as much trading going on, and we shouldn't factor that in too much to our decisions. But it was our biggest day Thursday since the end of July, and that's pretty significant when you're talking about a 6-week high or so. Comparing circulation on our NVT model, where we'll compare the amount of tokens circulating on the BTC network versus where the market cap usually stands, the higher these bars, the worse the signal is. The lower the bars, the better. Typically, red means bearish, green means bullish, super green means super, super bullish. This orange here would be semi-bearish. This yellow here is neutral. We're continuing to see a lack of circulation. And you might say, well, we continued to see our all-time high a month after we had our first red bar. That's because this is a macro indicator. It tends to be something where as time plays out, the prices will go the direction that it is indicating. We can see it's not always going to be immediate like it was back in 2018, where we had a red bar here in February 2018 and immediately started sinking. Same with July 2019, immediately sank. But look, even here in June 2020, it did sink the first red bar, but the next two red bars, it actually was growing a little bit. And then we had this yellow signal as it actually fell as a result of these red bars. And then the yellow signal indicated the turnaround, and then 5 straight months of semi-bullishness where the price just absolutely exploded from 10K-ish all the way up to 64K all-time high in April 2021. So circulation overall continues to look not good enough right now. This is one of the big indicators that we try to really base a lot of our analysis on, and there's just not enough going for me to be super excited about Bitcoin. At least bouncing right back up And if it does and circulation doesn't change, that would be a bearish divergence. If it does and then circulation gets a lot better because of it, then you could see the same situation that we saw in September 2020. So it's all about how people react to the next price move. Hopefully that makes sense to you guys. Yeah, so I'll leave that for circulation. Let's go back to our charts here on Sandbase, taking a look at our MVRV ratio, which is in this case the 30-day time frame, which we think is a nice mid time frame to see what average traders over the last month or so have resulted in as far as returns go. If it is below water like this, especially below negative 20%, if you look at the top left of the screen right now, as I'm highlighting, you'll see percentages depending on what I'm hovering over. It got as low as negative 26% in mid to late May. And yes, the price ended up going a bit lower, but this would give or take be a pretty good indication that we're nearing a bottom. And there was a ton of dip buys going on here, and people were profiting to the point where in mid-June, they actually started, the average 30-day trader was at about plus 7%. And right when that happened, we sunk. And that was where about a week later, we hit that pretty much 6-month low, if you want to call it, maybe just a tad. It's tough to say which one is lower, but either here or July 18th. And then ever since late July, we were in pretty much an overbought territory where people were really riding up this wave until suddenly, as we'll often see, just like we saw a bigger one in May, we saw a mini one here at the beginning of this week. And now we're in negative territory again. Negative, as we just kind of pointed out here, is a good thing. We're not quite in extreme territory, but we are at a point where it is a less risky time to buy historically compared to 10 years or even more of this MVRV metric indicating where markets fluctuate. So that's MVRV. Let's move on to social volume. I'm actually going to add dominance to this as well because I think it's an equally important metric. So social volume is going to indicate the amount of total mentions across social platforms like Reddit, Twitter, Telegram, Discord, and other pro traders chats that we have public information on. In short, Bitcoin is not really getting significant discussion. Most of it came as the massive dip happened, and many people were calling for, dip buy opportunities around here. But after that dip didn't really come immediately, social volume hasn't ever really recovered back to the May levels. It wasn't even that high in its actual all-time high stage in April. But where we're at now, we had the biggest social volume spike pretty much since mid-June during the initial stages of the dip. And that's very common. It's usually a lot of people trying to trade the volatility, deciding whether this is just a blip in the radar or whether it's an actual time to panic. And so far, the people who actually panic sold when it was up here were correct. And if you got out around 50K, you are now in an opportunity to buy 5K lower and would get 10%, or you would have saved 10% on your losses if you were to buy right now. That being said, social volume is still relatively low. It seems like a lot of the hype around Bitcoin has kind of died out for the time being. And dominance kind of reflects that. Dominance is going to actually show the percentage of discussion related to Bitcoin versus all the other 1,500 to 2,000 projects that we track on Santiment. So overall, I mean, look at the trend just between early June and now, as so much more focus is on altcoins versus Bitcoin. It's an interesting sign. It tends to be a little dicey if Bitcoin is starting to be ignored at this level. So, just as we saw here from March to mid-May, the dominance level was really going down and down until all of a sudden we had this dip here and people suddenly got interested. A lot of volatility happened and the bears actually won that round. So keep an eye on dominance, see if it starts to pick up. That would actually be probably a good sign as the #1 market cap project in crypto is going to continue to dictate how the rest of the markets turn for a variety of reasons. Funding rate, I'll keep this one short. When it is up high, we'll get rid of the other two. I'm looking at funding rate for Binance in terms of Tether, funding rate in terms of Binance in terms of BUSD, and funding rate in terms of BTC slash USDT on BitMEX. But they're all neutral right now. I'm going to close these two out and just look at the Binance funding rate for Tether at the moment. It continues to be neutral. It was actually showing that people were longing too excessively right here. This essentially means that longs are paying a premium to shorts because they want and believe that the price is going to continue to go up. And it actually, for the most part, a lot of these people who were longing excessively here were kind of rewarded. They did quite well. I'll make it a little bit bigger here. And they closed their positions out mostly until we had this final big spike here. The big drop happened. People bought the dip. There was one more excessive long. And then as it started to dip below, it's been pretty much flat ever since. So until we start to see people getting overly negative, which would be bullish, or overly positive, which would be bearish, we're going to continue to kind of be in flux a little bit, waiting for the next move that Bitcoin makes and seeing how people in waves react to that. Address activity, so this is a big one. In short, it is fading back down a bit. It was actually on the rise, but because of some of the other metrics we were talking about, such as circulation not really being there, this wasn't enough for Bitcoin to just continue on this upward trajectory back to 55, 60K, at least for now. And because of this dip and the uncertainty people have, a little bit of stagnancy and fear going on, address activity is still sitting under 1 million active addresses per day after kind of breaching it for a couple days here in the first couple days of September. So that is kind of the magic number right now. We want to see Bitcoin's address activity at 1 million or more per day for us to feel confident that a big rebound can come. But as soon as one of these spikes happens for our pro users who are monitoring this chart on a day-to-day basis, that's going to be a pretty promising sign that something is happening. Sometimes it's people just trading the volatility or whales selling, which I'll get to in just a moment. But generally, if you see a sustained growth like this, rather than just like a single spike, it's going to be a good sign. So keep an eye on it from more of a macro perspective instead of just, the first candle like this over 1 million in a day is suddenly, it's going to signal the turnaround. That's typically not how it's going to work. Before we hit on whales last, this is mean dollar invested age. Not any serious updates to give in this department, but for the most part, dormant investments, dormant dollars in this case, are aging in their respective addresses at the moment. They aren't being moved at a significant rate in order to actually put the average age of investments downward, which would be a great sign. You can see the tail end of the bull run here as dormant investments were still beginning to move. And just after the all-time high, that's when it was starting to flatten out. This would have been the big warning sign right here that dormant investments were starting to stagnate. And then all of a sudden we have this big price drop and everyone is fearful and dormant investments remain dormant again till we get this mini dip here. And then we have a little bit of volatility followed by a run up. That is very often how mean dollar invested age works and why we love it as a leading indicator. But for now, nothing really brewing. We call this very, very mildly bearish as long as it continues to move up in this direction without any, at least tiny blips like this going on. All right, and as promised, last but not least, let's take a look at our millionaire tier, which would be the addresses holding between 100 and 10,000 Bitcoin and their cumulative hold on the supply of Bitcoin. We had it reach a peak back in late July when these whales were holding 49.18%, just under half of all of Bitcoin's supply, and that's a big deal. Usually when that happens, you'll see the price move up. And starting on August 10th or so, there was a big drop. And even though the price continued to go up for pretty much another month, this would be a bit of a warning sign here. That's a big drop. And yes, we started to see some accumulation from those whales about halfway back, but not up to here. And then when this started to fade, this happened in tandem with price moving up. That's a bearish divergence. And if whales are easing up on their holdings, on their total hold of the supply of Bitcoin, while price is moving up, that's going to be a warning sign for you. And sure enough, normally you'll see whales starting to show some accumulation signs after a mini dip like this. Not the case so far. They're staying down. They're at about 48.5%, right on the nose, 48.5%, compared to 49.2% just about a month ago, give or take 4 weeks. And that's a large amount of tokens that are now out of the whale's hands and are circulating into smaller addresses. Yes, a few exchange addresses I'm sure have benefited as well. I won't get into all of that and the details there, but the reason we like this 100 to 10,000 tier so much is because it's usually the largest group of mostly actual active owners of addresses as opposed to just exchange owned addresses. So take this for what you will. As we always tout on our calls and discussions and our lessons about how our metrics can be used, it's best to use these all in tandem and try to figure out a story in terms of what the top 5 to 7 or 8 best metrics are telling you, depending on what your strategy is. We're, of course, only looking at Bitcoin here. We've got 2,000 other assets with many metrics. If they're ERC20, we'll have just as much, if not even a few more metrics than we have for Bitcoin. Others more on the social end, but we've got a ton here, guys. This is just the tip of the iceberg I'm showing, and I hope you guys got something out of this, enjoyed, and I wish you all a great rest of your weekend. Talk to y'all soon.